Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
Do you know how disaster relief organizations can turn a phone line into a lifeline? They use MasterCard Send to get humanitarian funds to the people in disaster-stricken areas, simply and quickly, right through their phones, so they can pay for fresh water, food, and hygiene supplies. Together, the possibilities are priceless. Learn more at mastercard.com/nextgensolutions. Sometimes you need to take control to make a difference. That's why with FlexPath from Capella University, you're in control. Set your own deadlines and leverage your experience to move at a pace that works for you. Discover a different way forward at capella.edu.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello and welcome, everyone. Welcome back to the China Shop. We are so glad you made it. So glad you're here. I'm Shopkeeper Dan. With me, as always, is Kyle, creator of FinancialIneptitude.com. Kyle, how are you doing today?
I'm always doing good.
I'm just going to get a soundbite, and I'm just going to click it and play it. I'll ask that question. I am good. Anyway, folks, we are joined back again this week. Insert girder. Back again this week is Eric.
Dude, I'm sorry. That got me too. That was so funny.
Eric from ES Invests. How are you doing today, Eric?
I'm doing equally good. If there's another soundbite you could put there, I think that would be pretty funny.
Okay.
A lot of Futurama fans in the shop today, it sounds like.
Hell yeah.
No, man, I'm doing awesome. Stoked to be here with you guys. Thank you again for having me back. It's a pleasure to be in the company.
As long as you keep paying, we'll keep bringing you in.
I'm just telling you, I'm really glad y'all are super cheap, so this works out great.
Oh, shit. Oh, is he paying us?
Well, he paid me in compliments last time. Talked about how handsome I was.
That works for me.
What? Oh, okay. Let's get this show going with a little bit of music.
Oh, yeah, we got to do that first.
We'll just skip the two bulls trading information.
What?
Two bulls trading information.
I'm inclined to agree.
Two bulls trading information.
That is accurate. Very accurate. What information?
Well, Kyle, I think the biggest piece of news that touched my eyeballs today has got to be the Bank of England starting their quantitative easing back up.
Yeah, I was actually sad that you stole that one. Or found it first, I should say.
Stole it by posting it this morning, yeah.
But, checking the news in a timely fashion. Yeah. Getting a 4-hour head start, that's cheating.
Yeah, they stopped, which is crazy to me because I thought once it starts in 2009, you're never supposed to stop for a decade.
Well, that means they should have another 12 years of easing going on then, right?
Yeah, right? This did send the bond yields, they were steadily rising, the 30-year government bond yields, and then they dropped down a little bit today, an announcement of the Bank of England interventions. Yeah, it's strange to me the bond yields are going up so hard so fast over in the UK. But what else can they do? Like, it makes me wonder what's going to happen over here since we don't have the option of any quantitative easing.
Well, I mean, that was everyone's thoughts today, is seeing that. I think got everybody excited about the potential of a Fed pivot, but I mean, the Fed seemed to have pretty well stamp that out pretty fast.
Did you tell the market?
I asked nicely. It did not listen. Eric, what'd you make of all this?
Can't figure out heads or tails, man, to be honest. It's like I'm having such a hard time wrapping my mind around some of the intricacies and interrelations. One of the things I've been watching is just the target rate probabilities for the 2 Fed meeting. Mm-hmm. And there was a pretty profound change from yesterday to today in terms of the new target rates. So I've been starting to go down this random rabbit hole based on a likely related, but I don't think it would be necessarily a causal relationship between what we're seeing overseas and how we're reacting to it here. But I'm absolutely fascinated by the relationship and dependencies here, and obviously what's going on in the US is having a profound impact across the pond, man. And I'm really, really curious what this 2 Fed meeting is going to look like for us. So obviously kind of just stole that back to the US instead of focusing over the pond. But that is what I've been, the angle I've been looking at.
Well, where were all the people that were, that are looking to the UK right now is like what the US is going to do? Where were they when the UK was raising rates by 100 basis points?
That's a great question. They fell through the woodwork.
Only, or is it it doesn't fit their narrative?
Yeah, I think that's the the most important part of doing any sort of social media based forecasting is you just kind of pick the stuff that works, and then the other stuff you just kind of ignore and pretend it never happened.
That's not worked all that well for me, but I've tried it. I have to admit.
Yeah, I think what we're seeing over there is really important to keep a close eyeball on, especially as we head into the winter. And then you start adding in just a whole host of other issues. Like one of the, interesting related concepts to that is I've been reading a bunch of different articles that literally say the words, Europe has to hope for a warm winter. And there's nothing like basing, global scale economic functions on hope. I just love that.
Right.
Just hope. Hope it's warm. Oh, good.
Did we also not have Fed members speaking today, basically reiterating their hawkish stance?
Yeah.
I thought I saw calls still for 75 BIP in November and 50 for end of the year.
Bingo.
So they're still shooting for that 75 BIP.
Yep. Yeah. Kazakhs. I'm not sure how you say their name, but they're saying, the next hike has to be large. And then Bostic, I think it's Bostic. It says, the current baseline is 75 basis points at the Fed and then a 50 basis point in DEES. So it seems overall they're pretty consistent. Mm-hmm. I thought Bostic was interesting because it said they were talking about because of the lack of progress. I love that they highlighted that. Because of the lack of progress, they need to be more moderately restrictive. So they're still targeting 4.25 to 4.5 range for the federal funds rate by the end of the year. So we got some room to move, but looking at again those probabilities, we're seeing a pretty dramatic shift to a 350 to 375 basis point target rate in NOV, whereas before it was 375 to 4. So we're seeing like a pretty profound shift, almost like 15% change between those two target rates. So not to get too macro, but the rate conversation is still very much alive and well and in vogue.
Mm-hmm. What else you got going on, Eric, that you're looking at?
Pending home sales. So I actually just had a trade earlier. I talked about it in a live session on Sunday in XHB, which is Home Builders. Mm-hmm. And I was anticipating actually a much worse release today on the pending home sales. But as of, August, for August, pending home sales were down 2% from July. So I think we kind of expected that. I personally thought it was going to be worse than that, but I essentially just was trading the expansion and volatility into the event. So I came in with long puts on Monday and actually neutralized those yesterday for a tidy profit. But I think the pending home sales, we're seeing lumber moving around. I just think all of the rate conversation ties in really nicely with what we're seeing in the housing market. And I am one of those people that think that the housing market is going to have a pretty profound impact on the direction of the overall market over the next 12 to 18 months. So I think pending home sales contracting is, again, it's a little actually better than what I would have expected it to have been, but it's still bad enough that I think it continues the same trend that most of us have been seeing, which is that the housing market is just continuing to struggle. I think it was expected to come in at negative 1.5%, and then they revised it to negative 1%, and then it came in at negative 2%. So obviously still worse than their expectations, but I mean, I thought it was going to be even worse still, but I'm guessing they're still trying to unwind, some pending projects that were probably in the pipeline for a while.
What are the interest rates up to now? I thought I saw they're touching like 7%.
Yeah, I saw a 30-year, I think it was yesterday that I saw them hit 7%. Let me double check right now so that I'm not giving bad numbers. So yeah, I'm seeing everything from high 6s, and obviously a lot of it will also depend on like your credit score and whatnot, but I'm seeing some cracking 7 for a 30-year fixed.
Wow.
So yeah, there are some still hanging out like mid 5s, but those need like those have way higher upfront costs and stuff like that for the mortgage. So yeah, I mean, they're starting to crack above 7. There's even one, I think, this one, I remember looking at this one. So there's one from Blue Spot that's 8.25%.
Ooh, for a 30-year fixed?
For a 30-year fixed.
Good Lord.
So
there's no way the real estate prices that we're seeing right now can support interest rates that high, can they?
Man, isn't that like just such a fascinating question? Because I think a lot of us have expected to see the housing market correct a little bit more, but it is important to remember that there's a lag. So the markets more often than not are going to be a leading indicator, and what we're going to see in real estate itself is going to lag a little bit. So I think, there's a good chance we're just at the very beginning, which is what I've thought honestly for a little while now. But yeah, it looks like the 30-year fixed yesterday on average cracked 7.08%. Today it's back down to 6.82%. But the fascinating part is year over year, last year it was 3.14 and 3.16 respectively. So
yikes.
Yeah, I just don't think that the housing prices have moved in line yet.
No. So do home or interest rates on mortgages, do those track inflation? They're almost the same now at this point.
Yeah.
I think we need to create a new swap product and make some money.
There you go.
I was reading a fascinating thing on Reddit. The true think tank of the internet.
Yep.
And there were people that were like hemming and hawing, to get my Midwesterner analogy out. They were freaking out essentially that, I bonds, which for those of you that don't know, I bonds essentially are supposed to track inflation. They have a 0% fixed rate. And then there's an adjustable rate aspect to it that's tied to inflation. And that just cracked 9%. I think it's 9.62% right now, leading into October. But people in Reddit were talking about, oh my God, 9%, 9.6%. I'm going to put all my money in there. And, as per usual, nobody actually really looks at the product to understand what they are. But I still think that it's fascinating that I bonds hit that high, but it stays that way for 6 months and then it'll change based on inflation.
Right.
So not all that glitters is gold in this scenario, but nonetheless, that still is a pretty high metric for that to hit.
So real quick, do people use I-bonds as like an inflation hedge? Like, do you have like the people that had them before they hit 9%? Like, I don't actually understand that product myself.
Yeah. So the way I-bonds work is you have to purchase them directly through the Treasury. So you can't get them through a broker, just from a functional standpoint, for those that are interested. And the way that they work is they essentially have a 6-month trigger where they adjust the rates based on whatever inflation is, essentially. Okay. So they're designed to be an inflation hedge.
Okay.
There's a tracking error, as with most products like that. But that's the overall thought. So the important part to note is that a lot of those bonds, I-bonds, all different classifications of similar style bonds, they will have a fixed aspect and then an adjustable aspect.
Okay.
Some of them will have a higher fixed, but then obviously typically a lower overall rate of return compared to something like I-bonds right now. But as inflation changes, that'll change.
Am I understanding correctly then the best case scenario with an I-bond is your money is worth the same? Like, it would just keep up with inflation, right?
Realistically, that's exactly it.
So you could never get rich off of these. That's impossible.
It's theoretically impossible. Well, and especially if you add the fact that you can only buy 10,000 of them, like electronic I-bonds per year, it'd be real hard to get rich off of that.
YOLO and I-bonds. Let's do it.
Now that is what we need to see on Reddit. If I see that on Wall Street Bets, that's how I know we are in a new world. If I see the words YOLO into I-bonds, I don't know. I would just really absorb that moment.
Kyle, I want that to be the new motto of the China shop.
YOLO and I-bonds.
Really out there living.
It's fun. It's a sad state, though, where that might actually be one of the best investments where the best you can do is not lose money.
Oh, wow.
I have right now I'm having a slow year. I think right now I'm up. I think I did a post yesterday. I'm up 7.9% for the year. So it's a very slow inside year for me. But I think understanding the way that we deploy and the long-term effects of that is really where the beauty comes in, because a lot of people, I hear them talking about, I'm down less than the market. I'm thinking, like, where's the trophy there? Like, You know what I mean? I have a hard time understanding that perspective other than just trying to console our egos, because it is still possible to at least outperform the market. But to your point, Dan, like, it is real difficult to outpace inflation when it's moving like it is.
Yeah.
Doable, but tough.
Well, I got one more story. Do you guys have any other stories going on that you need to get out?
Nope.
Sir.
We've not done much SPAC news here in the China shop for a while.
No.
But I did come across one today. DWAC actually came out Monday. The blank check company that is all set to take the Trump Media Technology Group public. Two developments with them. They had $138.5 million of its private financing back out. They don't want to be part of the deal anymore.
That's never a good sign.
Never a good sign. And on top of that, they changed their mailing address to a Miami UPS store.
Wait a minute.
Yeah, you heard that correctly.
Huh.
I'm pulling it up right now because I'm on their webpage. Well, that's nice. You can get your passports done there too.
Yeah, no word if any of the Digital World Acquisition Corp officers are indeed getting their passports, but it does seem pretty convenient. So, I don't think things are looking up for this company. There's a chance they don't even acquire Truth Social.
That's such a stupid name.
It might sound stupid, but I think you always have to give Donald Trump a little bit of credit for being a seller. The man can sell some shit.
Yeah.
I just consider it an oxymoron. I don't go to social media for truth.
People telling the truth on social media. No, I've got a million Instagram filters that beg to differ.
Yes.
Oh,
truth
man.
about cats, maybe.
Right. Yeah. How much we love dogs, cats.
Yeah.
Have either of you guys been on Truth?
No, I've not checked it out. No.
I haven't either. I don't even know what it looks like.
Yeah, I have no clue. I came across one that was like the leftist side called Tribal. I was like, oh, that's helping. Let's all get tribal with our thinking here.
Stop it. Is that a real thing?
That's a real thing. Yeah, Tribal. That's also a social app. They're just like the proliferation of the niche social app is really sad. I'm trying to get less social apps in my life personally.
Right.
Yes.
Yeah.
I think that and a little less division among everything would be okay.
Wait, are you saying the echo chamber isn't healthy?
Yeah, separating everybody off into their own little cliques and letting them just talk amongst themselves is probably not a good way to germinate new ideas.
I thought separate but equal worked really successfully.
It depends on who you ask.
I'm saying that sarcastically, listeners. I
was
don't.
too.
Oh, look, I just got a cancellation notice.
It didn't take long.
But yeah. It wouldn't matter what company DWAC was trying to take public when you've got your private investors backing out. When the CEO, Patrick Orlando, has contributed $2.8 million from his company Arc Global Investments to push back the deadline because DWAC failed to garner enough shareholder support to extend the deal deadline. So maybe there's some buyer's remorse from the investors, but not from the CEO. I don't know. It does not look good. DWAC shares are trading around $17 a share. After hours on Monday, they peaked at $97 earlier this year.
Yeah, It's down 34.96% year to date.
Where's it at right now?
So it's at 1674, and it looks like it started the year at 51 and then peaked out at 97.
It doesn't look like it's stopping.
Yeah.
Oh, man. This is awesome. It's always nice to see something that might go to zero. It's so infrequent. So here's the hope.
Well, as a spec, typically what happens with those, if they don't close the deal, then everybody just gets their $10 a share back, right?
I know. I'm hoping for zero, though. I'm hoping everything gets locked up in some sort of crazy federal charge because it's Trump. Some crazy wild thing's going to happen. I'm hoping for zero.
Well, there are a lot of legal obstacles facing the company.
Sorry, there's also a big old hurricane right in the middle of their headquarters.
Oh, wow. Yeah, that's right. That's right.
It's a good thing they're subletting from UPS.
Well, is it too late to short them?
No, it's never too late. It's not zero.
It's not zero yet, right? Oh,
Fingers crossed.
Fantastic. Fingers crossed. Well, on that note, we want to thank you again for coming by, Eric, talking about the news, helping update us on what's going on in the market. It's always great having you here.
Absolute pleasure. Thanks for having me, guys.
Absolutely. And where can people find you?
At home, because that's where no, I'm just kidding.
At the UPS store.
Right. I'm getting a passport in Florida at this point.
Nice.
No, at ES Invests on YouTube and Twitter.
Awesome.
Are you doing another space call this week?
Yeah, I think we should. I hadn't really thought too much about it because I might actually be driving out to Arizona to go see my brother. But if I don't, then yes.
Well, you can go see Dan, too.
Yeah, I'm down in Tucson.
Oh, I'm going to be going to Flagstaff.
Oh, well, fuck you.
Yeah.
I'm sorry. I mean, that's way too north. Sorry, I'm not going to drive 10 hours to say hi.
I'm just saying, I was going to wear some jorts if that changes your mind.
Strangely, it does. That's on the menu. Sign me up. Folks, we're so glad you came by the shop today. Thanks for sticking around to the end, but we do got to close things up, but we will be back at you soon. Until then, happy trades.
Bye.
Oh yeah, like, share, subscribe, all that business.
All that jazz.
All that jazz.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
Membership fees apply after free trial. Cancel anytime.
Can I be real for a second? That goal you have to exercise and eat better, you really can do it. But nobody is going to do it for you. And nobody has to, because you can do it if you have the right tools and a community that cares about helping you get results. And that's us, Beachbody. It's as convenient as your TV or laptop, but you need to decide that you're worth it. Let us help you succeed. Here's how. Go to beachbody.com to claim your free membership and start feeling great.
Do you know how disaster relief organizations can turn a phone line into a lifeline? They use MasterCard Send to get humanitarian funds to the people in disaster-stricken areas, simply and quickly, right through their phones, so they can pay for fresh water, food, and hygiene supplies. Together, the possibilities are priceless. Learn more at mastercard.com/nextgensolutions.